Chakri Lokapriya as well joins in to talk about his thoughts on the trading session. Chakri, hi, afternoon. Do you believe that metals can have another shot in 2019 perhaps?
Good afternoon, Aisha. Yes, indeed, because if the valuations are pretty attractive and the stocks are actually down about 20% for calendar 2018, against the backdrop of a rather recovering economy. India's economy is not really overshooted itself. So that way the demand patterns look as they set to recover. I think that import price parity between imported and domestic metals still is in favor, and therefore I think the stock prices are likely to trend up.
All right, afternoon, Chakri. Let's get in a sense as to what the outlook is on individual sectors. The banking sector, for instance, there was a comprehensive report as well spelt out in Friday post-market hours. A lot of concerns as well were flagged off with respect to the gross NPA surging quite significantly. What's the sense that you're getting for the banking sector come the next year, particularly in terms of earnings? How are you looking at some of the concerns? Are they now behind?
Yes, if you look at 2018 has been a tumultuous, volatile year, as we all know. And a large part of it is because the banking NPA problems have kind of not yet been fully resolved. Power NPAs are still out there. But at least some of the good things such as NCLT and IBC has pushed a good amount of the NPAs to some kind of resolution. So if you look at this backdrop, the ROEs for financial services companies going into next year will improve, and against that backdrop the valuations will start looking even more attractive. Combined with that, the economy is itself not really doing that great right now. So assuming that there is some kind of pickup, and as credit growth picks up, I think financial services sector across board in 2019 will do extremely well.
Chakri, what's the sense that you're getting about sectors that rely heavily on the currency, particularly the IT space? You know, you had the rupee which tumbled to 74.38 against the US dollar in the month of October. We lost nearly 16% from the start of the year. Now we're back to the range of about 69 to 70. What's the sense that you're getting for sectors that are heavily export oriented or those that are linked closely to the currency?
I think two things. One is, if you look at IT as a sector, you're absolutely right, rupee has been all over the place, and even year to date is down about 10-11%. And you know, given the pace of the moves, the analysts could not keep up, thankfully, with the rupee falling and rising. And therefore I think largely the forecast for 2019 are around the $69-70 mark. So assuming the rupee is around that range, it won't really make a difference to the impacts. And as far as the US economy is concerned, economy is doing still, the real economy is doing phenomenally well. Unemployment rates are extremely low, corporate profits are very high. And against this backdrop, the IT spending from US corporates was likely to continue to remain very strong. So against this backdrop, I think IT will do well. On the other hand, in the case of other commodity companies which are linked to the INR, any kind of a stability in the rupee, and even if it marginally appreciates, I think will do a lot of benefit for corporates who did not know what to do with their hedging positions in 2018.
Right. Chakri, what about the oil trade? Any of the OMC names or aviation companies you think there's merit in perhaps at least a short-term trade, or do you think the large meaty part is already over?
Good questions, Asha. If you look at, I think aviation has largely remained a trade in my book for the last many years, and will continue to do so. And at this point in time, I think the trade is largely done for aviation. If you look at other crude beneficiaries, whether it's paint companies, Asian Paints, Kansai Nerolac, or cement companies, they also have a good amount of not just commodity but also crude linked inputs into that goes into the whole process. JK Lakshmi, big caps, Ultratech Cement, they benefit. Or even consumer companies for that matter, companies like Nilkamal and Supreme, they'll all see a reduction in their raw material costs, which should do well for their margins.
What is the outlook on the overall commodity cycle as well? Do you think that compared to what we witnessed last year, that the commodity cycle perhaps is turning a tad favorable as well? Do you believe that there is some promise in commodity linked names?
I think indeed, if you look at today, consensus forecast for global oil is about $65–67. If indeed that turns out to be true in 2019, then India finds itself in an extremely good place, and corporate India, which has directly or indirectly benefits, because one, direct input costs go down for several industries, and second, even indirect costs like freight also come down for other sectors. So largely, whether it's petrochemicals or oil refineries or just chemical companies, plastic companies, they all directly benefit, and indirectly all infrastructure too benefits.
Okay. What about the IL&FS crisis? We were just having a little bit of a wind back, a rewind of the year 2018, and talking about how that really came as an unprecedented event, but it had a ripple effect really on the overall market as well. Do you believe that now the overall cycle or growth for some of these NBFCs is going to naturally be slowed down, that investors will remain wary of the space as a whole going into 2019?
IL&FS, I guess, at one point became too much of making a mountain out of a molehill, and that had a knock-on effect on liquidity, became tighter, corporates therefore were squeezed harder on their working capital cycle. Today you have a new board which I guess is doing what it can to resolve this and solve the situation, and liquidity is coming back. So against this backdrop, I think as liquidity comes back into the market, for various reasons, NBFCs grew really fast in the last 4 or 5 years because PSU banks were in problems, NBFCs filled its space. Today PSU banks are beginning to limp back, so taking back some market share. So their growth rates are likely to trend down, but still be very healthy growth rates, so one of that.
Chakri, an interesting article as well that I read, that the PPF has regained the crown with giving the best returns. So some of those risk-averse investors really have managed to have a fairly decent year 2018. It's the broader end of the market that has really given everyone a lot of heartburn or sleepless nights. So what's the outlook for the mid and the small cap indices? Today we spoke to Purinjo Veliath, and he insists that going into the next year, the mid caps is where there is going to be quite a bit of action, though one needs to be stock specific. Do you share that view?
See, if you look at 2018, it's been one of smokes and mirrors, because if you look at even Nifty for that matter, it's only a handful of stocks. It's the IT companies, a few select private banks, and Reliance Industries, which has contributed to majority, more than 75% of the entire return. Many of the sectors, as you guys have been pointing out, real estate index, auto index, metal index within the Nifty are all down 20%. So, and the broader market, yes, is down 15 to 30% mid and small cap. And the reason behind that is, if you look at Nifty for that matter, the earnings growth has been only about 6 or 7% for this year. And if you take the mid-cap index, the earnings have actually fallen by about 17 or 18%. So from now you have a so-called low base, because if earnings is growing at 7%, which means you're growing in line with index, which means you're not growing at all. So against that as a base, and today companies' fundamentals are stronger than they were about 5 years ago, because NCLT, etc., has brought back some discipline. So now against a low base, as earnings recovery will tend to be much higher for both the large cap and the mid cap, and I think the earnings growth will be larger for the mid cap, and therefore the returns are likely to follow for the mid cap to be higher than that of the large cap.
Talking about our earnings, Chakri, soon we'll step into earnings season as well once everyone's back from the New Year break. What is it that you are hoping to hear from this quarterly numbers? Where do you think could be the big surprises coming in, and where do you see earnings continue to lag?
I think this quarter will be one of misses. You'll have more companies missing their estimates, whether it's auto companies or some of the commodity companies. PSU banks will still continue to miss their numbers big time. But I don't think this should deter us from investing, because we should look past these numbers, and markets being forward looking, we should start anticipating an earnings recovery once around the time the election is over, which is around June 2019.
Chakri, what's the stance that you're getting? We've spoken about Motown extensively today as well, talking about some of the speed bumps for the year ahead and what the outlook is. Even some of the experts that we engaged with said that with the new safety norms, a lot of volume it could be affected within the auto space as a whole. There could be some price increases. It's not been a smooth ride so far as well for the auto space as a whole. Are you betting on select pockets, say, you know, the two-wheelers or some of the PVs? What's the outlook for autos?
I think within autos, I think the farm-related ones like the Escorts of the world, the M&M, Mahindra & Mahindra, they would have a relatively better run, at least for the next 6 months, because of elections and populism and all that good stuff. And as far as two-wheelers, they're still kind of reeling under the higher insurance costs, but thankfully oil prices have come back down, and oil at the pump is now about 16% lower than it was in October. So as some of that makes its way into the coming year, let's say January, February, which are not traditionally strong months for the autos. So while you will have lower commodity costs, I think the benefits is going to be more after a few months later, maybe 6 months down the road. So I think we're likely to see muted auto sales for at least for the next 3 or 4 months.
Muted auto sales going forward, that's the take coming in from Chakri. In terms of how one has to really play the IT space, apart from the currency, which is what we discussed, it's clearly going to be focused on the digital theme that is likely to drive growth. A lot of experts are seeing opportunity in mid-cap IT counters. Do you believe that there is a sense to play some of these names within mid-cap IT?
Indeed, you know, companies including Tata Elxsi, LTTS, all these companies are doing really good jobs, and their earnings growth rates, they're gaining market share, they're getting new clients, new kinds of clients, and you know, across various industries, whether it's automotive or defense or even in retail, and all of which are growth areas in the digital space. So against this backdrop, you have companies, US companies and companies in Europe, which are doing well. Their IT budgets are still strong. So against this backdrop, I think companies like LTTS and Tata Elxsi are all looking very strong.
We were discussing in today's session that how, you know, the remaining part of this financial year and run up till election, there would be a lot of spending or a lot of freebies, a lot of incentives given in rural area, which would lead to rural consumption, and we were discussing how two-wheeler and some of the consumption names would benefit out of it. What is your opinion on financing space, microfinance, some of the NBFCs which cater to the rural part of the country? What is your opinion on them?
I think in that space, I think companies like Mahindra Financial Services, even Magma FinCorp to an extent, all these companies will benefit from financing a two-wheeler, financing from that end of the space, and also the valuations for all these companies have significantly corrected in the last 2-3 months, and so and liquidity is coming back. So from that perspective, when they report earnings in this quarter, we will see a significant slowdown in their loan growth rates. You know, from about the 30% that they're growing, the numbers will be strong, won't be as strong, but I think the valuations have kind of reflect that. So I think those are good pockets to invest in right now.
Okay, Chakri, thank you so much for joining us, and wish you and your team very happy new year, and hope you keep coming on our channel and give your expert advice to our viewers. Thank you for joining us. Okay.
Happy
Moving
New Year,
on.
all of you.
Thank you, Chakri.